Fine.
Great. All right. Well, welcome everyone. Call this February 13th, 2025 meeting to order at 3:32. Madam Host, can we call roll?
Chair of Staff,
Here.
Member Banuelos,
Give her 30 seconds.
Member.
Here. Councilmember Banuelos, are you with us?
Yes. Let
Will
the
reflect that?
order reflect that all subcommittee members are present.
Thank you very much. And we will move on to item 2, public comment on non-agenda matters. Are there any members of the public here that I'm not seeing? Seeing none, we'll move on to our official business. Welcome.
Sorry, I'm late.
Or before we get there, let's do the minutes, I believe. Second, the approval of minutes, yes. Were there any edits or corrections to the minutes of October 10th, 2024? Seeing none, approved as submitted. Thank you very much. Moving on then to item 4.1, our fiscal year 2025 quarterly budget review for the second quarter. And Veronica, is the floor yours?
Yep, I'm ready. Everybody's ready?
Thank you. Yeah.
All right, so our presentation today is the second quarter budget review of the general fund. This is a quarterly review we bring to the subcommittee 3 times a year. We usually skip the first quarter because there's not much to report on then. So this is the first time we're meeting over fiscal year 24-25 general fund results. So our agenda today, we're going to start with our general fund revenues, take a look at expenditures, and we will then summarize with some next steps and questions. Go to the next slide, please. So our first slide is just a visual of our adopted general fund revenues. In July, we adopt a budget, and in the general fund, we are expecting to bring in fiscal year 24-25 about $215 million worth of revenues. This visual is always a reminder that our property tax and sales tax make up the majority of our general fund revenues. This is the number 1 and number 2 categories that we always pay attention to. Next slide, please. So this slide has quite a bit of information on it. I'll take a few minutes to walk you through it. Starting in the first column, operational revenues. These are our major revenue categories in the general fund. We say operational because we back out any revenues that are one-time in nature, things related to grants, anything that isn't necessarily funding our day-to-day operations. So property taxes, sales taxes, utility users tax, et cetera. These are things we can count on that are routine and regular. Going across the top, we'll start with property taxes. The first column, budget. This is what we adopted for fiscal year 24-25, what we project to bring in. The next column shows fiscal year 24-25 year-to-date actuals. This is what we've brought in as of December 31st, 2024. So this should be our midpoint of the year. For property taxes, we see that percent of budget is 56.4%. Property taxes we receive from the county, and we always receive 55% in December and 45% in April. So this is just a little bit ahead of schedule. Being in the weeds in finance, when I dug into this, I saw that our true property tax number is 55%. We're right on target. This is showing a little bit ahead because of our unsecured property tax this year was high. That's one that can kind of swing a lot. That's things like boats and airplanes and unsecured property. So we are pretty much on target for property tax. The next column over, fiscal year 23-24 year-to-date actuals. This is a comparison to last year where we were at December 31st of the previous year. And then the final 2 columns compare the year-to-year number. So we're about $1.4 million ahead of last year, or 6.9%. Again, some of that growth is in unsecured property tax and supplemental property tax. It's not true growth of just property tax, but we do see annually about a 5% growth rate in this category. Sales tax, the next line down, this is our largest revenue generator in the general fund. There's been a lot going on with sales tax in the last few years, as you've heard us speak at council several times. Our budget for the current year is about $75.9 million. Year to date, as of December 31st, we've brought in about $23 million. So sales tax is received on a 2-month lag. So this isn't as bad as it looks. but we would expect to have about 33 or 34% in by now, but we have only 30%. Sales tax has been low for the last, I think, 3 years. We have held our sales tax budget flat. So in the pandemic, you've probably heard this before, we saw sales tax take some really sharp increases as consumers were staying home and spending their vacation money on home improvement projects and furniture and things. We've been waiting, so as it sharply increased for a while, and then we kind of started to see it course correct. And as consumers were getting back out in the world and taking vacations and we saw inflation, there was less spending on consumer goods, taxable goods. So we have been holding our sales tax budget flat, waiting for that kind of course correction to catch back up with our budgeted number. And we aren't seeing it quite yet. So you can compare that 22.9 million that we've received year to date with where we were last year. And you can see we're still behind by about $600,000 of where we were last year. We actually just had a meeting with our sales tax consultants last week. They have decreased their estimates for the coming year. We've kind of been, like I say, waiting for things to start picking up again, and they aren't that optimistic at this time. They're seeing consumers spending more on services locally, and goods are being bought online. So it's becoming the new trend, not quite returning to the pace of things pre-pandemic. And so again, this budget number, we don't expect to hit this by the end of the year. We do think it is probably going to be too high. We were hopeful this might be the year that we start to get back up to that level, but it may not happen that way.
I would.
Yeah, go ahead.
Yeah, I would just add that this is it's not just Santa Rosa. This is a statewide issue. And the revenue going in off of online purchases, going to the fulfillment centers, especially with Amazon, and is something that we need to take into consideration with our revenue estimates going forward. So we're still trying to figure out what that number is when Veronica mentions the sales tax estimates that our consultants are showing us. It's not just their estimates for the current year or the quarter, but they're also, it's their forecasting. They're moving their forecast out of when we're going to get back up to some sort of trend line. And the report doesn't look great. So, so it's science, but there's a little bit of an art to it as well to try to figure out what that right number is and put the estimate. One of the things that I would say is that what's troubling is that, our budget as a whole is already in a deficit. And that is with us estimating that we're going to get revenues the way they're going to come in. So even if we hit those revenue numbers, we're still at that deficit. So anything less coming in grows the deficit even more. So it's just something of context as we go through this. Sorry.
So moving down the line, utility users tax, taxes we receive on energy costs and cable and telephone. This one is received on a lag, so we do expect to hit our budget number by the end of the year. We show in the final column over a 17.5% growth year over year. That's just timing. This isn't true growth. We just have received more at this time of year than we had previously at last time of year. This is a fairly steady category. The next item down, other taxes, has some large items in it that we're going to discuss more in detail on the next slide. So we'll skip over that one for now. Licenses and permits. This is our building and planning permit revenue over in the planning department. Our budget was 3.18 million, and as of December 31st, we've received about 1.35, only 42%. And that's also, we're tracking behind the previous year by about $167,000. So what's happening in the planning and building departments we are outsourcing a lot of our projects to third-party people. And when we do that, the revenue goes directly to them. So this has to do with staffing and hiring. They have not had the staff to complete all of the building permits and planning review that's coming in the door. So while we're seeing a decrease in revenue, there's also some savings in spending on the other side because we don't have the staff. So that is why our revenue looks low. It's not necessarily indicative of trends of permits coming through the door, but it is low in terms of revenue. The next line item down is charges for services. This does also include some of our other building permits, our smaller permits such as mechanical and plumbing, et cetera, as well as all of our recreation revenues. So that's what the bulk of that is.
If you got one, go ahead.
Thank you. On license and permits, is that budget in line with the adjustments that have been made to kind of right size our licenses and permits for the amount of staff time? Or
For
is
the
that
amount of-
based on historical?
So for the amount of staff time, so
So the process we went through with our license and permits and fees, right sizing them, basically increasing them from what they used to be because it costs so much for staff to do. So, you know, we were subsidizing it basically. Is that included in this budget or is this before that?
yes, so this, I believe you're talking about the fee study that they did, that they
Yes.
just changed all their fee rates as of, I believe it took effect July 1, 2024. Yeah, so yes, this does include adjustments and changes in what they thought they'd be bringing in according to that fee study. And then we didn't see much of a change from the fee study in the licenses and permits line, but we have seen it in the charges for services line. It's embedded in there, particularly in our smaller permits, mechanical, plumbing, et cetera. Those have been coming in. We've been bringing in a significant amount of revenue in those that used to be very small amounts. But that's kind of washed up in all of the recreation revenues that we see there. So we are a little bit ahead of schedule at 55%. We do expect to hit this budget number, and it does show that we're ahead of schedule as compared to last year, 19% growth rate. That is primarily due to some of those planning and building revenues coming in higher this year, because in the previous year, we were on the previous fee schedule, so there was less coming in. The next item down is intergovernmental recurring revenue. This is revenue we receive from both the county for the Roseland annexation and also from the Grayton Casino crime mitigation funds. This is a fairly steady revenue source. We'll hit this target by the end of the year. We know what it's going to be and it comes in as such. Fines and forfeitures is primarily parking violation revenue, which is coming in low this year. We've had issues with staffing in that department, so we have not had the feet on the ground to issue violations, which is why we see we've only brought in 31.9% of revenue, and we are behind as compared to last year. And then other revenues is just miscellaneous small categories such as interest and sale of property, et cetera. Nothing groundbreaking there. And our transfers in, this is transfers from other funds within the city that comes into the general fund. An example of this would be, we have special revenue funds for gas tax that we get from the state. And we are allowed to take a portion of that to cover administrative costs. So we transfer some of that from our gas tax fund to our general fund. And again, our budget will be exactly what the expenditures are by the end of the year. That's a known thing. So that will line up by year end. So all told, total operating revenues, our percent of budget as of December 31st are at 42.8%, mostly driven by sales tax, which is received on a lag. So it's not terribly alarming at the moment. But as compared to last year, we're ahead of where we were last year by about 6.4%. So whatever reductions we're seeing in sales tax, we might be making up in property tax and some other areas. It has yet to be seen. When we come back in April, we'll have a third quarter review and be able to see a little bit clearly more of what's happening in the general fund. So next slide, please. This is a deeper dive at that other taxes category that I mentioned on the previous slide. We were going to break down for you. So in other taxes, we have various categories. BLF swap, this is property taxes we receive from the state. We get 2 equal installments throughout the year, so we're running a little ahead of schedule. We got 51.6%, so by the end of the year, we'll get another equal installment. We'll come out a little bit ahead. Franchise fees, we received the bulk of this in April, so even though it's only at 33%, we are on track. Motor vehicle license fees, that's another one we don't receive until the end of the year, and that's small dollars at $200,000. Cannabis industry tax, we are ahead of schedule a little bit at 55%. We've seen this one kind of stabilize in recent years. It usually comes in between 1.8 and $2 million. So we do perceive this one as being on track. It doesn't necessarily trend equally month to month, so we expect it will come in at about 1.9 million. Business tax, we get the bulk of our receipts in February and March. And with the new ballot measure back in November, we do expect this one to come in about $2 million over budget, which is good to see with the new business tax measures in place. So again, when we come back in April for the third quarter results, we'll get to see where we landed for the year. Real property transfer tax is one that every year we keep adjusting our budget downward because we're seeing it drop and we haven't quite gotten down low enough to where we should be yet. Don't want to be too aggressive in dropping that down, but this is one that's based on home sales volume as well as price. And the housing market right now is not as hot as it has been in the past. So we expect this to come in at a little over 3 million by the end of the year. So we will be coming in under budget. And then finally, occupancy tax. As of December 31st, we are at 47% of budget. This is in line. This is what we would expect to see. This one also had the tax measure passed in November. So we expect this one to come in. It will definitely exceed budget by the end of the year. And that concludes the discussion of revenues. That's the revenue side of the general fund. And then we're going to switch gears and talk about expenditures and how our spending has been going so far. So we have another long table for you. We look at expenditures in a couple different ways. One, we look at them by department, and then the other one, we look at them split up with all departments together, but we just look at it by salary and benefits spending. So this table is by department. So in the first column, we have all the departments in the general fund. I'll note that we do exclude project spending because we find that to be volatile and it isn't really indicative of, the timing isn't annual. We might build up a bunch of budget and then spend a bunch in one year. So it kind of skews things annually when we look at spending. So this is truly operational expenditures for these departments. The first column is budget. That's what we adopted for the current year. The second column shows where we are as of December 31st. Again, so percent of budget. The way spending works, I would expect to see anywhere from 40 to 55% be quote unquote normal or expected. Departments that are coming in under budget is usually the result of vacant positions. That's why we would not be spending, or timing of invoices. If we haven't paid things leading up to December, maybe money was spent, but the invoices have not been paid or haven't hit the general ledger yet. And then departments that are a little ahead of schedule, such as Rec and Parks and Fire and Police, they're kind of ahead of that 50% mark. What we've seen in, so example, in Fire, their vehicle replacement line item was hit 100% on July 1st. So that was kind of just a timing issue. We made a big expenditure in July that was not going to be repeated throughout the year. Same with Rec and Parks. They paid out a large contract cost for their landscaping early on in the year. So a lot of this is timing. City Council, I'll note, looks behind schedule. That's because we had a large election cost back in November that we budgeted for, but we don't pay the bill until March. So that's another timing one. So a lot of these are explainable. All told, on the bottom line, our percent of budget that we have spent so far is 49.57. So that's just about where we would expect to be as of December 31st. And in our final column, when you look at the percent change as compared to last year, we have spent 10.5% more than last year, which is again as expected. We had a 7% cost of living increase for all employees, and other costs increase, contracts, vehicle costs, et cetera. Costs continue to go up year to year. So the next slide, please. So this is a breakdown of salaries and benefits. Another category that we pay very close attention to in the general fund, because this is about 74% of our expenditures are people costs. We do have a hiring freeze in place right now. So there's a lot of vacancies that are being held. Still, as of December 31st, we've spent 48.2% of salaries and 49.3% of benefits. So we're pretty close. But if this holds, you have to consider these are very large dollars. So if this holds and we see this same trend for the second half of the year, we're going to be coming in at about 97% of budget, which equates to over $4 million of savings. So if we can continue on this trend, that $4 million of unspent appropriations can help close our budget gap, because we did pass over a $13 million deficit. So we're hoping that this hiring freeze will help close that a bit. Go to the next slide. So in conclusion, the general fund is materially in line with adopted budget, both on the expenditure side and the revenue side. We'll see more in the next quarter, but at this point, there's nothing alarming or anything we need to course correct. Those held vacancies, as I mentioned, may help reduce our deficit. Sales tax, I say may have positive growth in calendar year 2025. To be honest, we put this presentation together over a month ago and things look different a month ago. So over a month ago, we were seeing some positive trends in sales tax. Since then, we've met with our consultants and found out that those were one-time anomalies, and the growth we were seeing that might have looked good, they're not quite so optimistic about. So again, as Alan mentioned, this is statewide. This is not just us. Sales tax, we're hoping will maybe stay flat. If there's any growth, it will be very, very small. Our $13.3 million structural deficit is ongoing, and council had the opportunity to make reductions on January 28th, which were acted upon. We have not seen those reductions in this data yet because this was as of December 31st. So when we come back in April, we'll see how some of those budget reductions affected those categories. Sales tax budget, we are going to be having to reduce that budget. I mentioned we've been holding it flat for a few years, but since the actual sales tax collected is just not meeting what we've had, we are going to have to reduce that one downward, which will have a pretty significant effect on our budget going forward. So in fiscal year 25-26, we are in full swing of putting that budget together right now. It will be focused on further reducing general fund operations. So our next steps as we continue to refine revenue estimates and our long-range forecast to see where the general fund lands. As I mentioned, we're in full swing of the budget season, so we're trying to come up with a picture of what our 25-26 budget and our deficit is going to be at the moment. We'll have that in the next month or so. We'll be back in April to show you our third quarter update, and at that time also we make a projection of where we think the current year is going to land. So we'll be able to project out to see where we think we'll be by June 30th. Our next budget study session is scheduled for April 15th, and we'll be bringing proposed reductions for council to evaluate and make comment on of reductions we can make to the general fund operations. And then we have another study session in May, and that is our in-depth budget study sessions that we bring to council. Before I turn over to questions, Alan, did you have anything else you wanted to reiterate or hit on? We got it? Okay. Wanted to give you the floor if you hadn't had anything. Okay.
I think my interruption did what I did. Yeah.
If anyone has any questions, he did.
It was a good interruption, and thank you as always for really thorough and it's a safe presentation. Looking to my colleagues. Oh, good. You asked your question.
Just about the sales tax. I have a lot of concerns also. I mean, I just don't feel like our economic outlook right now is very good. Whether people buy things online or not, I don't think people are buying. So I know you said you were going to make some adjustments. What kind of adjustments do you think? How low do you think you'll need to go for it to be more in line with reality?
We came in under budget last year by $5 million in sales tax. We know it's probably somewhere in that ballpark. And kind of, we met with our consultants. They had some further research to do. They were going to circle back with us. So we were looking, at first we said maybe 2 million, 5 million, maybe more appropriate. We're not quite sure yet, somewhere in that ballpark.
It would be at least 2.
That seems
And then it's anything above that is and again, I mean, that's reducing the resources that are available for the budget. So
I get that.
there's a lot of thought and there's a lot of work and not only with our staff, but working with Avenue to make sure that we're giving the most likely number as possible. We don't want to be too conservative. We've probably been a little bit, we needing to tighten that number up a little bit. Again, it can have some shockwaves when you start lowering your largest revenue source. But that is the reality that we're seeing now. We had a third party come in and look at our forecast. They gave it high marks. I mean, there's a lot of work that's done by staff. Ours is very detailed. It's a good forecast. And I think from a validation standpoint, that sounds good. But one of the things that they said was that you've got to do something with that sales tax number. So between that and property tax, making sure that we are reading the trends right. With property tax, we're actually, revenue was outperforming our estimates. So, tweaking probably both of those, but I think from a budget standpoint, we're really tweaking the sales tax. So I would say we still have probably another few weeks of trying to figure that out. When we lock in our budget and go through the city manager reviews, that's when we're gonna paint the full picture of where we are with the deficit and how we're moving forward. And then that leads into our budget study sessions coming up in April and May.
Thank you. That was really a very thorough presentation. I really appreciate you going line by line. Thank you.
And Veronica, you addressed most of my questions. Back to the consultant's forecast for a second. When are they thinking that the curve is gonna catch up?
So if I can pull up the actual thing in a second, but if I remember correctly, we were getting to, I think they were showing positive growth in 26, 27. Part of the problem is that the calendar year versus fiscal year, so and the lag, but their forecasts to us are on fiscal years, and I believe we were getting into true positive growth, and that positive growth was about 2%. The growth rates of 7, 9%, that's gone. We're looking for 2% is probably normal. And so you're looking 2 years out before we even get close to that. I think they were thinking that for the latter half of the 25, 26 year that we're getting into maybe the flat territory. So at least we're not low anymore. But we've had, I think it was 4 out of 5 consecutive quarters of negative growth in there. It's and over the last couple of years, it's been that as well. As far as hitting our trend line again, correct me if I'm wrong, but I don't think we do. We have to
I know,
readjust the trend
it's,
line.
yeah, to get back up to what we have budgeted in the current year, I was gonna say it was gonna take 4 or 5 years or so.
Right, and I was talking about their trend line.
Their trend line,
It
okay.
it dropped, and if you take out the surge that we had a couple of years ago, their trend line was showing it not hitting. I think you're looking many years out. I think that was one of the things that struck me, is that they're gonna have to readjust their trends.
So the takeaway is we're bottoming out right now, and there's some hope that we start to slow climb, maybe 12 months from now,
Yeah.
2 years from now, something like that. Okay, that's helpful. That said, I think this is at least I think it's the third budget in a row that I've been involved with where you've come in within like 1% or 1.5% of estatiments. I mean, good kudos to the team for being like pretty precise in where we're coming in, especially with all the factors in play. With the business tax and the TOT tax, again, we're just starting to collect those now. Our projections here estimate or assume for some increase for with both of those through the remainder of the year.
So the column that says budget does not include the higher increase. So we
really?
expect our actuals are going to be for business tax, for example, $2 million over what we budget. Because when we put the budget together, the measure had not been passed at that point, so.
That's right. Oh, good. I'm glad I asked. There's a little bit of good news. On the TOT side, is that like $1.5 million? What was that?
800,000 or a
Yeah, I
million,
think-
around there. Yeah.
Okay, so some potential good news there
Yes.
if receipts come in through the end of the year.
Yeah, and you will see the budget reflective for 25, 26 of what we think those higher revenue estimates will be. And they'll be informed by what we are getting the latter half of this current fiscal year. So as we put everything together, we have that estimate. We'll stretch it out as long as we can before we lock it in June. But we should know what our business tax, at least for the renewals, are by that time, because those are due in end of February, March. And then we'll have, 4 or 5 months of TOT coming in as well. So those will inform our budget for 25, 26. Basically, anything that we get from that, from the increase that went in effect in January is just gonna kind of be icing on the cake for this year, for the remainder of this year.
Take it.
Absolutely.
All the icing we can get. Yeah.
Fondant, whatever.
Yeah. Then my final observation was just, thank you for highlighting the dates for our upcoming study sessions. Yeah, there's nothing, we're not dealing with anything more important than this right now. So I appreciate how regular this is, and I'm sure I speak for my colleagues as well. It's a lot of work for the team to put together these summaries. But again, it's the biggest issue that we're touching. So thank you for all the work.
One more quick question.
Oh, please.
Can you remind me again, what line item but is business tax and TOT, is that other taxes?
Yes,
Okay, and forgive me if you covered this, but Measure Q?
Measure Q is in sales tax. That's in the
Okay.
sales tax line item.
Not to give you any more work, but I think it would be, is it easy or simple to carve that out so that we can see it, so we can see voter approved taxes in
Absolutely.
the budget versus what we naturally get, just so we can get, I think that would be useful.
That's easy to do. Mhm.
Good point. Anything else from you?
Nothing else for me right now.
All right, well, we'll go to public comment, but again, we don't have anybody here with public comment, so we'll move on to item 4.2, the city investment portfolio. And Veronica, are you on deck again?
So I'm here to introduce the item. You thankfully don't have to hear from me again for another number of slides. I'm joined by Mike Fragoli. He's an analyst on the budget team. Mike has been with the city for some years and reminded me that when he first started, investments was one of the very first things that was handed to him. So he is by far our subject matter expert on investments. He's going to give you an overview of the city's investment policy and what we invest and how it's invested, et cetera. So I will turn it over to him.
Thank you, Veronica, and good afternoon, Mayor and committee members. As Veronica pointed out, this was one of the first assignments that I was tasked with when I started with the city. So it makes sense for me to present the investment overview. So starting on slide 2, we have this broken out into 4 sections. The investment overview, followed by the investment policy and objectives, and the monthly investment report, followed by any questions. So next slide, please. So the city's investment process starts with the city's cash. So when I say cash, I'm talking about things like sales tax, property tax, bond proceeds, and cash funded capital projects. So this cash is held in the city's Chase operating account. And any cash that is determined to be in excess of foreseeable operating need of the city is invested by the city's investment advisors, PFM or Public Financial Management. And so on a daily basis, myself and my coworkers, we determine if there is either a cash surplus or a cash need. If there is a cash surplus, we will ask PFM to invest this cash surplus, so we're not missing out on any yield. We don't want, money just sitting in a savings account earning little to no interest. So we will ask any excess cash to be invested by PFM. If there is a need for cash for large ticket items such as debt service or PERS payments, we will ask PFM to liquidate the appropriate investments to make that cash available. So next slide, please. So the investment policy was originally adopted in January of 1985. Since then, it has been amended by council I was surprised to see this, but a whopping 15 times. So the last amendment was in July of 2023, so fairly recent. And the remainder of these bullet points are really just highlighting that the city works with PFM to make sure that our investment policy and our practices are in compliance with California government code. And at the bottom of this slide, you'll see a link to the investment policy if anyone wants to look at that, or I could email it if it's easier. Next slide, please. So the investment objectives. So this is the part of the investment policy that I kind of consider to be the core part of the investment policy. In order of priority, the objectives are safety, liquidity, and yield. Safety being paramount, right? We want to make sure that the city wants to make sure that their investments are held in a safe security. The investment does not allow for a security to be obtained that is below an A rating by any of the recognized rating agencies. Next in the objectives is liquidity. You'll see in a future slide, the majority of the portfolio is in the 6-month to 3-year range. Reason being is the city doesn't want their funds to be tied up for long term. If they, happen to need that money, it's safer to not have that money wrapped up in a 7 to 10 year security and then risk the loss of having to liquidate that before that time. And then the city also doesn't want to give up on any yield, right? I mean, considering the other two objectives, safety and liquidity are met first, the city doesn't want to give up any interest that it can be earning. So next slide, please. So the monthly investment report. So the investment accounts are reconciled monthly, and a report is drafted to be shared with council and the public, and it's posted online at that link below on this slide. So the report includes overnight investment vehicles such as savings accounts, money market accounts, California state investment pools, and as well the individual fixed income securities. So if you scroll to the end of the investment report, you'll see every single security listed out. And this also includes operating and bond proceeds. So that annoying email that you all get once a month is 90% of the time from this guy. And then 10% of the time it's from my coworker, Trisha Reeve. So
The email that we read diligently.
yes, that's what I meant. That's what I meant. So and you eagerly await. So the next 3 slides and the remainder of the slides in this presentation are just snapshots from the investment report. So the first slide on or the first snapshot on slide 7 is a portfolio summary that breaks out by security type what the portfolio is invested in. So as you'll see, the majority of the portfolio is invested in US Treasuries at about 40%. This is as of November 30th, 2024. This makes sense being this portfolio is extremely conservative, and US Treasuries are, in my opinion, there's no such thing as a no risk investment, but that's probably about as close as you could get. So it makes sense that about 40% of our portfolio is invested in that. There is a sizable amount that are in corporate notes. In addition to wanting to diversify the portfolio, PFM, my understanding, also has invested in these because they often tend to offer a little bit of a higher yield than treasuries do. So that's part of the portfolio that's trying to take advantage of areas that offer a higher yield without sacrificing the safety or liquidity priorities. So next slide, please. This next slide goes over the maturity or breaks out the maturity of the entire portfolio. So as I think I mentioned previously, the majority of the portfolio is broken out or is contained within the or held within the 6-month to 3-year duration. And that makes sense with a portfolio that very much values liquidity. There is about 19% that is held in the 3 to 5 year range. And my understanding of why PFM has decided to do that is because even though interest rates were cut a number of times during calendar year 24, interest rates are still pretty high, right? So because of that, PFM is trying to take advantage of those higher yields with some of these longer durations. And so next slide, please. The portfolio yield summary slides. So I find this to be a pretty useful comparison that's basically taking 3 yields and comparing them. So the first yield that is in column 4 that's titled portfolio yield at cost. This is an aggregate yield amount of the entire portfolio at the time these securities were bought or what they were at cost, right? So it's a historical rate, but I basically look at it to mean this is the yield the portfolio would earn if we held every single security that we have as of the report date to maturity. The next yield that's one column over is the LAIF yield. LAIF stands for Local Agency Investment Fund, and that is a state-run program that offers investing for very low fees for local governments such as Santa Rosa. And the policy allows for us to invest up to $50 million utilizing this pool. And not only is this a very safe instrument for us to use, it offers good yields and it's extremely liquid. So if we have $50 million on any given day, we could get that $50 million out on the same day, right? So that's very useful if we're dealing with some sort of unanticipated obligation that's pretty material, right? So, and then the final yield that's on this slide is the 1 to 3 year Treasury yield. So as I think I already mentioned, Treasuries are about as close as you could get to no risk investments. So this is a pretty standard benchmark in comparison to compare yields to for that reason. I will point out that the portfolio yield at cost, as mentioned, that is a historical yield. That is what the yields were when we bought the security in the past. The LAIF yield, that is a monthly yield, so it's a little bit more close to real time. The 1 to 3 year Treasury index yield, that is market value as of the report date. So in this case, it's November, right? So the timing of these is not, exactly the same, but I still find this to be a pretty useful comparison of, what is our portfolio earning if we held everything to maturity compared to, say, a Treasury, right, at market value. And yeah, then you have the nice little graph there that kind of shows how they line up over the past year. And I think next slide. I'm happy to take any questions.
Excellent. Well, thank you again. All the smart guys go over to the bond side. Investment, it's impressive to walk through that kind of sophisticated portfolio like that. So thank you for that, and I'll bring it back to my colleagues. Questions on this report?
No.
I'm sorry, no, I just think it looks really, really good.
I'll ask just a couple. This ties back on the general budget. Does this tie back to the other revenues line item? The returns, the investment returns from this pool, that comes back, where does that come back in terms of the general fund?
We do get a portion. So this is citywide funds invested. So everything that belongs to the water funds, to
Oh,
the
of
special
course.
revenue funds, to housing authority. So a portion of it, as we do earn interest, a portion of it does come back to the general fund, but not all. Our budget amount every year is $600,000 of interest earnings. And what we actually receive can really vary widely, depend on the year of returns.
600,000, not all of it's coming back to the general fund, because some of it's tied up in restricted funds.
600,000 is what we budget in the general
In the
fund.
general fund, that's
But
what I was missing. Is that in that other revenues line item?
It is in I believe it's not in other revenues, it's in, what's it called? I'm sorry, yeah, it is other revenues. I was thinking other taxes, other revenues, way down at the bottom. So it's kind of our miscellaneous small things. That's where our interest is received.
Okay, and you were anticipating my next question. How do we estimate that? I mean, you're looking ahead, you've got macro forecasts for the bond market, you're making some guesses, but how?
So we don't. I'll
Good.
be
I like
honest.
that.
We'll just be, we put in a $600,000
Okay.
number.
Is that a
And-
long-term average?
Yeah, maybe. I mean, honestly, it's a plug of a number. it would be, it would be bad for us not to have that number in. I'm sure it's gone up maybe over time, but it would take me a while to look back to see if we ever did do that.
Yeah, so for the record, Scott Wagner, Deputy Director of Finance. I'll add a little context. In that it really became city practice to take a conservative approach on interest from our portfolio. Because what we really haven't wanted to do in the past is on a year where we felt uncomfortable with a negative return coming in. It would be a very draconian task for us in finance to basically take a hit and put that into our budget, when in reality, like what Alan's saying, we really aren't sure. And it's very hard to predict investment returns. If I could do it very, very well, I wouldn't be sitting here right now. And so I don't want to do that for the city. So it really, it hurts us on one end because we would love to put more money in, but the benefit of us not taking a more nuanced approach to it really benefits the city on the long term. And for context, since you brought it up, Chair, you know, when we look at these numbers and they're very large, so almost $600 million sitting in the city's investment portfolio, I want to give a context that what Mike does is he's really looking at what the operating need for cash is of the city. I think that can be lost sometimes. So what we're trying to do is keep the cash in our checking account to make payroll, to do all the things that a business owner does, while keeping the other majority tied up in investments. And again, for like reference, that almost $600 million number, about 145 of that is the general fund. So, you know, water, our utilities, the housing funds, et cetera, they hold a lot of cash naturally from the form of that operations, especially Santa Rosa Water, where we're thinking about all these large cash funded projects they have. So about 145 million is general fund money. Unlike in my personal budget, where I keep my investment funds separate from what I'm considering of doing my own personal budget, we don't do that at the city. That's not how governmental accounting standards work. I'm taking the whole 145 million that we have in the general fund investment account. That's my starting point for our reserves. I consider that a current asset of the city. So often I think there can be some confusion around, well, the city has all this money in investments. We're counting every dollar of that. When I look at the city's need for resources, I'm counting it because I know Mike can turn those investments into liquid resources in a day, essentially. I hope that helps.
That helped a lot. And thank you for that $145 million number. I didn't
And I'm
realize that.
rounding a little bit, so bear with me.
Close
I don't
enough.
like to round. I'm an accountant, but I'm just.
So we're still talking about 75%-ish of the general fund that's actively or that's invested in some kind of liquid instrument. I didn't realize it was that high. It plays into my final question, which was I wasn't sure. I mean, obviously, having studied the investment policy in detail, like we all have, although I haven't brushed up on it recently, I couldn't remember if there were any constraints on how many city funds or the level of city funds we had invested in any given moment. But it sounds like we're analyzing constantly to see what funds are eligible to be put into those investment accounts based on our cash needs. So we're trying to wring everybody yield out of those funds.
It's a collaboration between staff, and they do an exceptional job between Veronica and Mike, really, and it is daily. It is a consideration that is being made by staff daily in accordance with our advisor, et cetera. So it's a very thoughtful exercise and we are very successful at it.
Thank you also for pointing out why it would be awkward to have to show an investment decline in a given year and why it's better just to have kind of a placeholder figure in there. That makes complete sense. Thank you again. This is a really, I mean, again, this is a complicated presentation and it was done very nicely. So thank you for putting this together. No other questions from me, and we have no public comment. So we'll move on to item 5, future agenda items. I will look to my colleagues. Are there other items that we would like to see added to the next agenda?
Not specifically right now. No.
Ms. Benoist?
I hadn't thought about it. This is great, by the way. I hadn't thought about future.
For future, I don't have any to add right now, I think my interest is in just keeping these discussions and the study sessions in front of council, just a constant updates in terms of where we are with our current budget and in thinking about future budgets. I like the rhythm that we've established, and I certainly like the information that's being put forward. I don't have anything else specific to add for future agendas at this time.
So, and
Any staff wishes on this item?
at this point, not right now.
Okay,
Our next meeting is, I believe it's March 13th. And we should keep that, and we'll definitely have something on the agenda that we can talk about, and it will be worth your while.
teaser, I like that.
Yes, stay tuned, everyone. The 3 people online. And then we have one in April. That will be the third quarter performance review, and we'll probably go over our forecast then as well, because all of that will be solid. And that's the April presentation is probably the best idea of or showing of what you're going to get for this year and what has really informed our budget going forward for the future year. So that's a big meeting. But there's a lot of things that we'll be wanting to bring to this group to talk about as we move through the budget and the things that we need to do with the budget.
Perfect. Thank you for that glimpse ahead. You've got an eager audience here, so we'll look forward to the next couple of meetings. And with that, we can move on to our final item, adjournment. Thank you, everyone.
Thank you.